What do you think about the dollar index? Have you been watching this one at all?
Yes, I think I thought maybe it was going to move today, but it seems like it's still stuck at the same level since last week. But the overall structure here, it's still on that uptrend. If maybe we break this support area, maybe we will see the market starting to go lower. But next week we have interest rates. Maybe something will happen. But at the moment, we can see that we're stuck here. The market is just consolidating. Maybe we will see maybe the market trying to push higher, but it seems, or we can see that it's struggling. So it's not like the dollar is quite stronger or weaker. We're just on the same level. So I'm just waiting for a proper move before we can decide. But at the moment or during these times, mostly we will see the overlap, like the market doesn't really correspond to each other. The correlation is not really the way we know it. We know very well that mostly when we see gold going down, we were going to see a dollar index going up, but now it's a different story, you see.
Yeah, no, exactly. I wanted to also show you this, Kenzo, and you might have already seen this, but for the audience as well, I've got the Fed Watch tool pulled up. As you just mentioned, the Fed meeting that happens next week, July 31st. We have a meeting, and currently the expectations are that we do not cut interest rates next week. However, if anything changes between now and then, we could see this number actually get bigger. And this number, to its credit, around floating just under 7% for a chance of a first interest rate cut, shows something in the market's attitude towards interest rate cuts. Now, I saw something else. This is more interesting. So probably not a cut next week, possible but unlikely. But then you look at September, and this is where things get interesting. The September rate cut is where most people think, oh, that's probably where we're going to see our first rate cut. But check this out. If we take a look at September, yes, there's a chance, or there's a strong chance. It's almost it is saying a 100% chance of our first interest rate cut in September. But this is the interesting part. There's an 11.9% chance now, according to Fed Funds Futures, that we actually see a 50 basis point rate cut, which is basically like 2 rate cuts, right? It's like 1 rate cut's being 25 basis points or 0.25%. 50 basis points would be a pretty aggressive cut, or not aggressive, but it's a much bigger cut. So we may not see the cut in July's meeting, but we may see a double-sized cut in September. I don't know. What do you think about that? Do you think we could see 50 basis points?
Yeah, that is too big. 50 basis points is too big, unless if maybe they're trying to cover for the rest of the year, or if maybe they want to cut 3 times, but they see that they no longer have enough time. But I think maybe 25 basis points is the way to go, but anything can still happen. I think that way they will be little bit aggressive if they go that route.
Yeah, and probably what this would tell you, Kenzo, would be, I actually think that it'd be better. We would probably assume that the economy's perfectly fine with this, but if this happens, now you're probably going to get a little bit concerned about, is this economy a little rocky, right? Because if they're jolting a bigger rate cut into the system, the trend usually is when the Fed cuts rates or raises rates, they typically do so, and it ends up looking like this. It looks like a stair stepping where they just keep doing something, and then what we've seen slowly, recently is, and then they, this is the idea. So once they start cutting rates, they're probably going to cut rates for a while. So, I think that it's probably, to your point, a little too soon to start that process next week, but perhaps in September we see the first rate cut, and whether that's a 50 or 25 will depend whether or not the economy is showing more signs of cracking by then, or if it's holding in there. So we'll see, I guess.
Yeah, but if maybe, let's say there is that possibility of cutting with 50 basis points, I think it will be better going with the 25 now. Let's say 25 basis points this July, and in September also 25, not to go aggressive, because that will be actually aggressive. So because if they can cut with 50 around September, why not now with a smaller 25 basis points? So but we will see. But I don't think they will go that aggressive. And unfortunately, I don't really know after September how do we still have other rates, or maybe they're going to be next year. So because we still have other ones, because if they cut with 50, you might find that the other event they might not even cut something like that. You see?
Yeah, that's true too. I would generally agree, and I also, like I said, would actually feel a little bit nervous if we saw 50 basis rate, because then it's like, wait, why didn't we? Is the economy showing a lot of signs of cracking? Is that why we're cutting 50 basis points? That'd make me nervous. And again, rate cuts are only positive. This is something we always have to reiterate to people listening. Rate cuts are only positive if the economy is still doing okay. But if the economy is doing poorly and you're cutting rates, that's cutting rates to save the day because things are breaking, not because, hey, inflation's chilling out, we can lower the rates. There's two different stories there. And actually, historically speaking, when the market sees, steady rate cuts with the economy doing, decently well, stock market flies. But when the economy is doing bad and they're cutting rates to try and help out, that's not good, right? That's like recession side of things. So that's where you hear people say, like, when they start rate cuts, the stock market's going to crash. Yeah.
Panic.
Yeah, right.
Yeah, that will be like a sort of panic. It's not going to look good, especially on the indices. So that will give us something like maybe we expecting a recession or something, you see.
Yeah, and that's the thing, is we'll have to see where that all kind of plays out overall with the next few weeks before the September meeting. Are we going to see the economy, normalize? We want to see jobs data, but we come in not bad, but not really good either, right? We really want to see just what we've been seeing, like healthy jobs creation, but not explosive jobs creation, because that would be inflationary, or crashing jobs creation, because that would be recessionary, right? We just want to see the Goldilocks zone. We want to stay kind of jobs data is coming in okay, but it's not coming in bad or too strong. So that's that. I think I made a point yesterday that I think that the NFP report next week is arguably going to become more important for a little bit than the CPI report. I think that jobs data will be very, very important to this market going forward, because now we're watching the economy. So
our summer software sale is happening right now, which means you can get the Edge Finder for 50% off. COT data, top setups, pages of fundamental and technical data, and so much more. Our software is constantly scanning for new data and information and is updated regularly. The Edge Finder is a one-time purchase, which means you can get it half off right now and never have to pay for any updates made to the Edge Finder software. This limited time offer won't be around for very long, so don't wait and get this incredible trading software for half off before it's too late. Check out the link being dropped in the chat now to talk to one of our team members about our huge 50% off summer software sale.
Do you have any positions on gold, opinions on gold? This thing flew up to almost 2,500, made it to 2,484 or so, and have seen a pretty steady drop since then. Do you have any thoughts on gold right now?
Not much. I was just watching this breakout here, but it seems like it's gonna reverse. So I don't think it's gonna go higher like that, because I think maybe things might cool off. We don't really have aggressive tensions or geopolitics, and if things are cooling off, I'm expecting it maybe to sell off for now. But if maybe things are not going good, especially maybe on the NFP side and maybe CPI that we're gonna get coming week, I think we will see a continuation of a sell. But if maybe tensions are continuing, maybe US politics and stuff, maybe we'll see some reversal. But at the moment, we don't really have something that we can panic about. So mostly golds tend to behave nicely when we don't really have anything wrong going all over the world. But yeah, I think for now, I think we can see maybe a continuation of a sell, especially when we broke out of this smaller support area. Maybe we'll see something like that.
Yeah, exactly.
For now,
and
maybe until we get some NFP stuff, maybe it's where we're gonna get something.
Yeah, and you made some good points there about just the geopolitics side. When things are not actively escalating, it takes away some of the excitement from gold. For gold to really be pushing higher, you usually have to see uncertainties about elections or tensions in the Middle East or tensions in Asia, wherever, something that gets the market a little scared, because gold typically makes its biggest moves higher during fearful environments. I mean, this move that we saw back in October was the beginnings of the conflict in Israel and with Hamas. So that caused a huge surge in the price of gold. And so, typically you need some sort of fear catalyst to really see gold make massive moves. I also think that gold could kind of overall slowly trend higher due to rate cuts, but it's not the same kind of uptrend that geopolitics plus rate cuts gives you. So I think that for now, gold is chilled out. If it does start to break highs, we see something new form, I'll probably be looking to get long again. But for now, there are other places that I'm just a little bit more interested in. So thanks for your thoughts on that. Go ahead.
Yeah, I think on gold, it might trend quite slower, not like before, because before, if you still remember, it was Israel, you're right about that. And also around this time, April, I think Chinese index or stock markets were almost crashing. So mostly they were buying gold. And from there, it seems like now they're slowly doing well. Chinese economy is not really performing very nice, but it's better than before. So that's why we saw the slowdown of gold. And now it means we're just waiting for the US events. Are they going to cut the rates or not? If they do cut, I think we're still going to get maybe a bullish move, but maybe quite nice, not like before, obviously.
Now, I was looking at crude oil. Initially, we saw this nice little downtrend here, just a triple tap off this trend line, but it didn't line up with my personal rules, so I avoided it. So from there, I was saying, we've clearly broken into a downtrend. We've had clear lower highs formed. So I was looking for some sort of pullback. At the time, price was actually down here. We saw this really nice move to the downside. And I woke up this morning, we had a really strong pullback. We had a very impulsive 4-hour candle. And I was saying, this looks pretty good for a little pullback, and it lines up quite well with this 50% pullback. It's not perfect. And I say this every time, the markets aren't perfect. So when you use trend lines, supports, resistance, fibs, whatever you use, you need to be a little bit lenient with them. And this is why you see a lot of traders. So for example, even myself and Nick, we draw boxes with supports and resistance rather than drawing lines like this to represent a support and resistance, because obviously the market can still use this general area as a level of support, but it may not use it perfect. It may not come down to the very bottom of this wick and then reject, for example. That's why I'm happy to enter slightly below this 50%. I mean, it's only half a pip roughly off, so it's fine. But yeah, essentially that's the reason we saw a clear, clear move to the downside, 50% pullback. We had the moving averages cross, and we were also looking at this article yesterday together. So this is oil edges up on strong US GDP data, but Asia economic woes limit gains. So essentially we did have, again, that little move to the upside, I think early this morning for me. But yeah, overall, I'm not going to go through and read all this, so I don't want to bore you guys too much, but overall the data suggests that we could continue to see a lower price in oil. So definitely something to keep in mind. For anyone that doesn't know, this is just CNBC. If you search up crude oil CNBC, you can find this website. It's nothing hidden really. So yeah, we're letting oil run. Looks quite nice so far. NASDAQ. Now this one is a little bit more interesting. So again, if you guys have been watching my segments on these streams often, then you'll know that I've been looking at NASDAQ quite frequently, mainly looking for this sort of mean reversion. And it seems we are sort of having that thing of what I expected, but the approach at the moment is essentially just position building. Now, position building isn't something you really hear about too much, especially in the retail world. However, position building is very, very common in the institutional world. So rather than, let's say an institution has, I don't know, let's say 500 million that they want to put into a trade, you know, obviously examples purposes. They can't and they won't want to just put 500 million into one position. So they won't enter here with, you know, 10,000 lots, for example, and just let it run. That's just not how it works. So the way that large market participants move in these markets, they will often have a few different positions placed throughout the market, and that's the approach I'm taking on this one. And the reason is because I don't see NASDAQ really just reversing right now. I don't see we bounce off this support and just head back up and create new all-time highs. However, I think we're starting to get to an area where price is slowing down, and we're starting to see potential buyers come back into the market. We are coming down to some significant levels of previous resistance, which we can now use as supports. We do also have, if we draw the fib from the low to the all-time high, we are currently at a 50% pullback. So I have entered this position. As you can see, the stop is huge, take profit's quite large as well. So essentially looking to just scale in again when we do get to slightly lower price, or if we do get to slightly lower price. So this trade actually is very small. I think it's about 0.5% of what I would normally risk. So very, very small risk. And then again, I would just scale in if we do see a lower price. And if we don't, you know, if we do for some reason start rocketing up from here, then trail stops on this one, and then scale it again to, you know, stabilize the risk back to how I would normally have it, at roughly 1 to 2% depending. So let's just see, we could do gold and dollar yen for sure. So I was actually going to move on to gold next. I am in a short position on gold. So these are, I've been sort of day trading gold at the moment, not really looking for many swings. So you can see I had a position here. This was a winner. I had another very small position here, which was a lose. This was only negative 0.1. I had very, very small risk on this one because I wasn't super confident, but I quite liked it. So it was, you know, worth the risk in my opinion. So with this position, this is essentially following the short-term trend. So we can see, obviously, we created all-time highs up here. We came down, we've created a lower high. We've had a move to the downside, another lower high here. We are now seeing bearish moving averages. So obviously the 200, this red moving average is above the 50, indicating a bearish market. We do also have what to me looks like a break and retest of this level throughout here. So I'm just looking for more of a technical play on gold rather than a fundamental driven sort of swing trade, which is what I would normally do. However, we are, you know, heading into the end of the month, so not really looking to get into new super long positions other than NASDAQ. We do also have, which is quite good for me, the yen finally having a drop, finally. So I'm still in, you know, again, I don't know how many of you guys watch my segments often, but you may have heard that I took quite a sore loss or quite a nasty sting on some of the yen trades that I had. However, I left some of them open, basically just to leave them open because I'm still confident in the idea. The move to the downside was just far more than I was expecting. So I cut off the higher positions at higher prices and left the lower positions to keep running. So when I'm still, like I said, still bearish on the yen. So if the theory does work out, then I can cover the losses I suffered from the initial positions, if that makes sense. But again, these are position trades. They're not swing trades, day trades or anything like that. But yeah, we have a really strong weekly level on the yen index here. We can see, obviously, we've formed this low. respected again as support, and now we're testing it as a sort of double top here and resistance. So that's great. Australian dollar is starting to recover. So if anyone doesn't know, there was a lot of confusion actually about the New Zealand dollar and the Australian dollar about why they weakened so much recently. And it's simply because of China. So if you don't know, Australia and New Zealand are heavily reliant on China. They're very, very correlated and very related. So it's important to understand that, you know, it's not something where just because Australian dollar goes down, it has to necessarily be, you know, Australian dollar has done something or the, you know, if that makes sense. Anyway, I'm rambling here. So let's move back on to regular things. Let's go to pound dollar. I saw that was requested. So hopefully we can see a slightly higher price on pound dollar. And the reason I say that is because I still want to go short, but I just think we're not quite ready for that yet. So I'm waiting for the Fed cuts, essentially. And I'm going to move on to the Fed cuts in a moment because I've got something that may be interesting for you guys if you are fundamental traders. So yeah, I think the pound still has some steam left, in my opinion, but not much. So the reason I say that is because we obviously had the elections in the UK not too long ago. Well, almost 20 days ago, roughly, give or take. Now that was a sign of relief for the economy. It was more of a case of, okay, finally the Conservatives are out and we can start potentially fixing things like healthcare and public services, and even generally just the economy. But the huge issue really is that they can make small changes and make some steps, but I just don't think it's enough, and I don't think they can fix, how do I word this? The rate of how they can fix things, I don't think can keep up with the rate of the problem. I don't know if that makes sense of what I'm trying to say, but that's the best way I can think of it right now. So overall, I still think, like I said, I still think the pound has a little bit of steam left to come a little bit higher. And then very bearish, especially with the Fed cuts coming. I think we could see slightly higher prices on pound dollar. So we're at a really nice level here, and this does look like quite a clean break and retest. We obviously had this high over here that acts as resistance. You can see it was rejected as well back here in June. So this is the 1.28 level roughly. Let's just see if this lines up. Almost. So this actually does look quite nice for a buy from a technical standpoint. Prices basically come back to the 200 moving average. We are hanging around this 50% pullback level. So I don't see really much reason we couldn't potentially head higher, at least back up into this level here at the 1.31. But yeah, we will see about that. Now onto the Fed cuts that I was saying. So I've got another article I want to show you. Now this is actually quite a good example of you don't need to be super intelligent and have Bloomberg terminal and all these, crazy things to just get a grasp on what's going on in the markets and sentiments and all those types of things. You can simply just go on investing.com, Bloomberg, Reuters, free websites where you can just read thoughts, analysis, ideas, and economics. So essentially, Bank of America is only looking for one Fed cut, and they are looking for it in December, which is quite interesting. So again, I'm not going to read all this out. You can feel free to go to the website. The article is obviously called B of A's Out of Consensus Call. So yeah, we can just have a look here. Overall, Bank of America continues to hold the view that the Fed will cut rates once this year in December, and are less concerned about the risks of sharper economic slowdown. However, they acknowledge that September cut is now closer to their baseline. We think markets are just back to being overly optimistic about the upcoming cutting cycle. A dovish Fed, soft July employment, or a repeat of June's inflation could change our thinking. So something to keep in mind as you are trading into the coming months, because obviously there's a huge talk at the moment about the September rate cuts. So it'll be interesting to see if we do get that, or if it's just just word of mouth and rumors. So yeah, I lost big amount in the yen too. Lol, money comes and goes, brother. Yeah, it's fine. I mean, when I say it was a nasty loss, it was more of an ego hit rather than a financial hit. It's money, it'll be made back, or it's already been made back. It's profit that's just been decreased, if that makes sense. It's not like I've taken a hit to my bank account or anything. GU will go long when Fed cuts rates. Yep, exactly the idea. However, Fed cut, again, referring back to that article, essentially the September rate cuts are already priced in. So it's essential to keep that in mind too. Pricing in markets is very important. And that's one of the reasons, actually, when we get results like Nick was talking about earlier, when the results of, let's just take NFP, for example, come out exactly as consensus, we don't see much of a reaction. And that's because that's already priced in. That's what people have expected. They've already put positions into the market. It's not really changed anything. However, when there's a surprise, so if NFP overshoots, undershoots, that's when we start seeing the market go a bit crazy, because it's shocked as people opening positions, closing positions, taking profits, taking losses, and those types of things. So it'll be a very similar thing when the Fed does cut rates or doesn't cut rates in September. So just keep that in mind.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.